Double whammy hits the housing market with rising mortgage rates and prices that have skyrocketed beyond what most people can comfortably afford. So, what does that mean for home prices? Well, stay tuned and we're going to tell you. Hey, everybody, you're watching Bull Boom Bear Bust. If you like these reports, please give us a thumbs up. Please make sure that you are subscribed. It helps this channel stay alive. Also, I apologize, no camera today. I've got some troubleshooting. There seems to be a software issue because even after I got a new camera, there seemed to be some, let's just say problems. But you're not here to see my face. You are here for the economic and, in this case, the housing market news. So let's go ahead and get right into it right now. With this recent news, existing home sales plunged more than expected, a 7.2% month over month in February. Now, that was the biggest drop month over month since the big decline when the emergence of the health crisis hit the United States. Home sales are also down 2.4% year over year. That's the seventh straight month of a decline on that year over year number. And the number of sales is likely to drop even more and get worse as we continue because the closings that we saw in February were homes that entered escrow in December for the most part. And that's when mortgage rates were much lower back in December. Does this mean home prices are going to stall and start dropping? Absolutely not. There's too many other inflationary factors here. Now let's just talk about some recent price data here. The median existing home price for all homes in February was $357,300. That's up 15% from February of 2021. So year over year, up 15%. Folks, there's so many things that are causing this inflation that rising mortgage rates and even unaffordability are not going to stop prices from rising. Just the energy prices alone are causing significant problems for home builders and basically most businesses. Also, many things could happen that most people do not realize are possible. For example, they could print endless amounts of money, give it to a corporation. The corporation can turn around and come in and buy unlimited amounts of homes. All right, I'm not saying it's going to happen. I'm not making any predictions here. I'm just letting you know the types of shenanigans that go on behind the scenes and how much worse things can actually get. A lot worse than most people realize. All right, we've seen record-setting institutional buying, corporations, companies coming in and buying homes at record amounts over the past 2 quarters. And the first quarter here in 2022 looks to be another record. We're going to find out here in just a few weeks what the result is for this first quarter. But you might want to ask yourself, where did these companies get so much more money versus what they had in the past? Why are they buying so many more homes now than before? Once you answer that question, once you realize that, then you know the problem that we're seeing here, not just in the housing market, but in the economy in general. Now let's take a look here at a chart out of the NAR, and we see the year over year price growth actually dropped compared to the first quarter in 2022, but just a slight drop. Instead of 15.3% year over year, we're up 15% year over year. Now it's not quite the price growth mania that we saw leading up to the 2007-2008 bursting of the previous housing bubble. Now, let's talk about what needs to happen to bring home prices down, to actually have prices drop. And again, I don't think this is going to happen because there's too much greed out there and there's too much quest for power out there and a big urge for monopolization from the global mega rich. But what needs to happen is they need to pass a law where companies cannot come in and buy unlimited amounts of homes. Also, they need to stop printing money and giving it out to these companies. Also, banks need to be restricted on the lending. They should not be allowed to print money out of thin air and give out these loans with nothing in reserves to back it up. So these are all major structural changes that need to be done within the financial banking system in order to reverse this. We also need to see a big drop in energy prices. Again, I don't see that happening. You may see corrections and pullbacks on the way higher, but I don't see any significant drop unless they come out and they say, hey, we found 10 billion barrels of oil that we didn't know about. Some crazy Twilight Zone sort of event, but otherwise prices are going to continue to go higher. It may not be the 15.3% that we saw in the first quarter 2021, but year over year numbers will remain higher until some of these structural problems are resolved. We're in a whole new paradigm here compared to what we saw 2007 and 2008 with the way that the financial system is being run right now, the way banks are unleashed, able to create endless amounts of money out of thin air. No matter how many of these loans people can't pay back, they can just get more money fed into them by the money printers. It's absolutely insane, and prepare for things to get much, much worse from here. Prepare for prices to get a lot higher. And now it's not just home prices we have to think about, it's everywhere else. The cost of transportation, the cost of insurance, the cost of food, the cost of your utility bills. More pain at the pump, cost of cars and trucks continuing to rise. We still have the chip shortage, not enough manufacturing. Also in the housing market, too many people, not enough homes being built. Severe weather destroying a lot of homes, and that continues to seems like it gets worse every year. With the emergence of these just more strange weather patterns and events, taking out more homes, displacing more people. So I think the nightmare, financial nightmare that some people are in right now is going to continue to get worse here as we progress into 2022. In the second half 2022, I expect things to really become even more noticeable to most people. So folks, continue to stack whatever your choice of stacking is. Continue to brace for this economic storm that's going to continue to get darker and louder. Continue to look for places to invest, but also be careful at the same time. We see a lot of instability in the world, instability, a lot of events emerging right now, and things are likely to continue to get much, much more dangerous and difficult with uncertainty, imbalances, and a lot of upheaval that's happening politically and societally. All right, everybody, thanks for being here. Big love to all of you. Stay well, stay safe, keep stacking. Bye for now. Peace.